In this video, I'm going to show you how we can mitigate our losses using selling premium. See, when the buy and hold investor loses like I have with my recent trade with DraftKings, you're seriously hurting. But by using selling premium, we're able to mitigate our losses. I'm going to show you exactly how I did that 3 times in this video. Stick around. I know you're going to like this one.
Let me show you my eyes.
Hey, welcome back, everyone. It is time for another red-hot cover call video. Well, hey, look, today we're not talking about cover calls. We're talking about the cash secure put and how recently I've had to roll down trying to get credits to get out of a bad trade. We're going to talk about my recent DraftKings trade. I'm going to show you where once it was good, now it's bad, and I'm actually taking a loss on this trade. We're going to talk about it, and I think you're going to learn something. Now look, before we get going, if you've never been to my channel, I want you to subscribe to the channel. It's right there, and it's free. I try to come back and show you winning trades, losing trades. We talk about my trades, so maybe you learn something. I'm from the old school where if you show me once, show me twice, it's actually going to sink in a little bit more than me reading a book. That's just me. That's just the way I learn. And some 4.5 years ago, that's how I learned. And ever since that day, I've had success selling premium, writing covered calls, and selling cash secure puts. Hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're going to jump right into it today because I have a lot to talk about. Basically, we're going to talk about 3 trades in one. It involves DraftKings, and I think if you understand how we roll out of trades, you're going to get this pretty quick. And you're also going to realize that I put myself in a really bad position. But really, what I want to talk about today is the power of selling premium and how we can mitigate our losses. Okay, so let me give you an example. If we bought DraftKings when it was trading at 63.64 and we own the shares, fast forward some 1 month later, it's now trading at 35x. We have an unrealized loss of hundreds, if not thousands of dollars. And we're really in the hope and pray business at that point, hoping DraftKings moves higher, hoping to get out of this hole. Now, selling premium offers us the ability to mitigate some losses. I'm going to explain this where I find myself in a bad spot, but as I rolled down trying to collect credits, I was able to mitigate a loss. We're going to talk about that because originally when I did my very first cash secure put, my loss, had I been assigned the shares, would have been over $6,000. But because I rolled down and out, I was able to reduce that. In fact, my second trade, I made money when I did that. But the third one, not so good. And in fact, I'm going to take a loss of over $1,200. But I'm going to show you how this plays out. So what I want to show you is a case study. Of course, if you've been watching my channel, you know I love to do these case studies, the buy and hold investor versus the selling premium investor. I always get people saying, John, had you just held the shares versus selling premium, you'd be making so much more money. And I love showing how selling premium allows us to make money, right? Monthly income, money on the table, and I'm able to make more money in the time frame for which I trade the stock. I love doing that. And in this case, we're doing a selling premium case study where I'm going to talk about rolling our options versus sitting on our hands and being down and, to be honest, feeling you're in the hope and pray business. So the setup is simple. This is what I send my premium members, and it's meant to educate, explain. These case studies are really meant to lay each trade out, see how they played out, talk about them, and maybe up somebody's game. So let's talk about this case study. I'll break it down, and I'm going to show you the chart as well. We're going to talk about that, but let's talk about the original trade. In fact, I'm going to go to the chart right now and just show you where I was at so I can explain this original trade idea. So many of you will remember way back here when DraftKings was trading at about $36. That's when I did my very first cash secure put for the wheel, and things really took off. I was never assigned DraftKings, and this thing just rallied above 65. I'll tell you what, all is good, right? The NFL season's going. That's where DraftKings makes all its money, and life is good. Well, I'm watching DraftKings. I mean, I think DraftKings could go higher from here once we get out of the pandemic and we get all of our sports back, DraftKings is going to be in a great situation because they're also looking to get into the sports betting side of the business. So it seems like there's a lot of good things happening for DraftKings. Well, when it peels off, and it peels off hard because a couple things happen. The NFL have some COVID issues and really looks like it's going to hurt DraftKings business profits, right? If you don't have the NFL, DraftKings is going to be hurting. And this run up here really had a lot to do with the anticipation of all the NFL games being played. Well, then they came out with a secondary offering, and Wall Street did not like that because the stock was trading at 65. The secondary offering was at like 56. So of course it's going to sell off to 56, and that's what it did. And then the markets start peeling off. We start getting all kind of talk about the pandemic again. We get the election talks and all this stuff, man. Wall Street's sold off some 10%. In fact, the Dow from its recent high is down about 9%. So DraftKings, because it's a lightly traded stock, and to be honest with you, there was so much profit in this, Wall Street's taking profits, and they're just getting rid of the fluff, right? Well, this thing has fallen down to some $35. But before it gets there, John feels right here is an opportunity to do a cash secure put. And in fact, the very first trade I did, I felt very comfortable with it. I looked at my support lines. Man, I had it all dialed up. Well, I ended up getting some seriously good premium for that. And I wasn't worried about anything. I knew this thing would recover. And in fact, the NFL seemed to be dealing with its virus issues pretty well. So I'm thinking, I sell that first cash secure put, I'm probably not going to be assigned the shares. But then it continues to sell off and it falls all the way down to $40. So I make my very first decision on this trade trying to mitigate the losses. So let's go back to my case study and take a look at that. So you could see the very first trade as DraftKings is falling, I sell the 49 cash secure put. I mean, this thing was just trading at 65. I felt that it had sold off so much. The 49 was pretty good. And getting $5 for that, I'll tell you what, I had visions of success. In fact, cash on cash, that was going to be a 10% play. Love having cash secure puts where you could pocket that much cash on cash gain for the time frame. Well, as you saw on the charts, DraftKings keeps falling. And now the option for which I got paid $5 is trading for well over $9. A ton of real money in that option. It's trading for $40. So that's at least $9 in my option price, right? Options have real money and time value as a part of their pricing. So if I sold the 49, giving somebody the right to assign me their shares at 49, it's now trading at 40. That option has at least $9 in it. Now I'm going to show you what I ended up paying for it to buy it back, to take the obligation of that 49 strike off the board, and then I rolled for another credit. But as you could see, I'm rolling because if I'm assigned the shares at 49, I am instantly going to realize a $6,700 loss. At this point, what am I going to do? I mean, I have a 49 strike. Sure, I have $5 of downside protection, so that makes my strike price more like 44. But now the stock's trading at 40 and the markets are falling. This thing can fall even further. So if I'm assigned the shares, you could see I'm immediately down $6,700. Now, considering that $5 premium I got paid, my true cost basis is more like $43.95. Okay, I'm down some $8 on this trade. I'm down $4,200. That's still a nasty loss. So instead of going that route, I'm going to buy back this option and then sell an at-the-money cash secure put, collecting more premium to mitigate this loss. Because right now, if I'm assigned the shares, I have a real $4,200 loss. So fast forward, I've done a couple things, and we're going to talk about it right here. So you could see the very first premium I received was $5. The stock had fallen below 49. It's now trading at 40. So I decided to buy the option back. I got $5. I'm going to pay $9. And I did that. So now I have to have a plan. I'm not going to sit on my hands and absorb that loss. So what I did was I sold the 40 cash secure put, and I believe it was an at the money, and I got $4 for that. And to be honest with you, life's good. If you do the math there, I end up making like $150. So I'm thinking this is going to pass. DraftKings probably going to go higher. I didn't lose much. and we'll chalk it up as a learning experience. Well, what I learned is the market wasn't ready to give up on its downward pressure. The thing kept falling, and it fell down to 35x, and I have a lot of time. See, this is a November 27th expiration. I already know a lot of you will debate whether I should have been doing this October 30th, right? But I want to mitigate these losses as quickly as I can so I can have a plan. The first buyback seemed okay. But then when it fell to 35x, I'll tell you what, even though I believe in my heart that DraftKings is probably near the bottom, right? All the sellers have come out. I mean, this thing is still falling. I need to make a decision. And what I decided to do was buy that option back. Remember, I got $4.60 for the second option. I then paid $6.80 to clear that obligation. Then I decided to sell the 36 at the money and collected $4.10. Now, when I add up all those trades, what ends up happening is I have a loss of $1,125. And that's going to be a 100% loss because I'm guessing that DraftKings is at the bottom here. It's going to move higher. I don't know if it's going to go back to 65. I don't have a crystal ball. But for me, this is what I elected to do. It's not a winning trade. And I know for a lot of you Salty Dog premium sellers, you're probably scratching your head. But what I really wanted to achieve here was to mitigate my loss. And when I found myself in that spot where when I sold the 40 and this thing is already down to 35x, I just threw up my hands and said, I'm done with this. I'm going to sell that at the money 36, collect what I can collect, and really turn my head and hope that it goes higher. Look, we can't win all the time. And trust me, I've been assigned shares. For example, I shared the Alibaba trade where I sold a cash secured put when Alibaba was trading for $185. And Alibaba fell all the way down to $140. And I still had 2 weeks left on the contract and my phone dings. And sure enough, the person that held that contract executed, and I'm stuck with Alibaba shares at 180, and the stock's trading for 145. And I just don't want to be in that spot. So I'm going to go back to the chart and explain why I was so fearful of being assigned the shares. But before we go there, this is what I want to show you, because for you shaking your head saying this was not a smart play, this was not a good decision, this is how I want to build my case. The original trade would have left me down $4,200. That's down some 17.27%. Now, me swallowing my pride and doing what I have to do, doing the trades that I did, I'm only down 4.5% on this trade. If DraftKings has hit the bottom and DraftKings moves higher and I'm not assigned these shares. So for me, I looked at it like, if I'm assigned these shares, I'm immediately down 17%. And now writing covered calls is very hard. I mean, I'm in at 49x or I'm in at 40. I'm not going to be able to write covered calls for which my first covered call is above my stock purchase price. So I'm dancing with the devil immediately. And I'll tell you, I don't want to be in that position. I'd rather be in a position where, yes, I've lost money, but I've only lost 4% versus 17%. So let's go to the chart. I'm going to break this down one last time. I'm really going to show you what I thought was going to happen and my biggest fear. So if you've never experienced this, this is actually what can happen. Once the stock falls below the strike price and below the premium paid. Okay, so you hear people on YouTube say 95% of the time your options will go to expiration worthless. Well, once the option is in the money, the game changes. And once the option is really in the money, where it's below the premium you were paid, now that option buyer is cleared. Or in the case of a cash secured put, they're justified in assigning you their shares. See, for them, they can't lose any more than $49. So they pay the $5 to me. That's their insurance. Well, now when it trades below 44, now they can justify assigning me their shares. And that can happen. Now, understand, you enter an options trade, a selling premium trade, you can be executed on at any moment. Okay, I haven't been executed on in the first week, but the last 2 weeks of a trade, I've been executed on, and that Alibaba trade is a great example of that. And my DraftKings trade was in the red zone of that happening because we got a lot of things coming up. There's a lot of events, and that person that took the insurance of buying my cash secure put may want their money. they may assign me their shares. So with that said, if I'm not feeling good about this trade, then I need to take action. Because once we got into the danger zone of $44, where the stock has fallen past the 49 strike, then it's past the premium paid strike, down here I can get stuck with those shares just by the option owner saying, yeah, I'll take my money now. And it happens. So that's when I decided to mitigate my losses, buy that option back, adding to my cost basis, selling the 40. Same deal here. With all these events happening, we go from 40 to 35, and I'm just, at this point, I want to be out of this trade. I'm going to use another cash secure put to mitigate this loss, and that's where I'm at. So for all you new selling premium players, do understand that once a stock is in the money, and then it falls past the premium you got paid, that can then justify the option buyer to take action. So I was very fearful of being assigned these shares at 49. And what am I going to do? Here's the shares at 49. They're now trading down here. I can't write a covered call at 49. So I decided to take the L, and that's where I'm going to lay it. I'm going to monitor this trade because obviously it's not over, right? I mean, if DraftKings falls even further, I can incur more losses or be assigned the share. Now, if you liked any of that and you want to be a part of it, I want you to subscribe to the channel. It's right there. Now, hey, look, I know a lot of you leave the video right now, but before you do, just understand the reason I'm showing this trade is because we have to have a plan. We have to have a plan. And my plan went awry. So I needed to do something. See, I'm not going to sit on my hands anymore like I did back in 2015 when the oil stocks crashed and I was heavy in oil. And that affected me in my wallet, and it also affected me emotionally. And I'll tell you what, man, if you can't keep your emotions in check, things like this will mess you up. Now, I'm a different trader now than I was in 2015. I am much more proactive and understanding of bad situations. And I just don't sit on my hands anymore. I'm going to make a play. Now, over the past 4 years, I have been blessed with not having to do a lot of this. And taking true L's like this, man, I'll be honest with you, last year, I only did it once. And that's some 300 trades. So I've been blessed with the skill, with the experience to not have to do this too many times. So when it does show up on my doorstep, I'm going to take action. And that's what I try to provide all of my CPT dashboard members. They get emails all the time where I break down things just like this. In fact, I did a stock commentary email just 2 days ago where I talked about the state of the market, what to be looking for, and what I'm doing. And I'll tell you what, if any of that interests you, go back to my website. I got a free 1-month offer there. You know, if you're sitting out there, you feel like you're a good trader, but you're just not confident, sign up for the membership and see what I offer you. If anything, you have access to me and my emails, and you can always email me questions. You could submit paper trade grades. And of course, I'm always going to reply with, what would John do? Or seeing the world through my eyes. And that might be the difference between you being a successful trader and one that's not so successful. So head over to cptdashboard.com, click Upgraded Dashboard, and see if any of that interests you. Hey, look, I'm going to leave it right there. We lose on this one, but I'm cup half full. I'm always looking for my next successful trade, and I'll show you it right here on the channel. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.